Today we're going to go over the simple steps for the 50 pips a day currency trading system. We're also going to answer some questions about best trade setups, round numbers, US sessions, and we're going to review some of the best trades from last week. Stay tuned, traders. This is going to cover everything in detail. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. I think we're at a tipping point this week, in the next couple of weeks, possibly in the next year, for some potentially huge trends to take place even over the next few months. We've got a lot of opportunities that are building into this new month, today being the first day of September. We're going to cover everything in detail. I'm going to break this down into individual modules so that people can go back and review this, the approach that I use to the markets, but I'm going to clarify some things along the way that will hopefully allow traders to step back and really grasp the reason why I trade the way I do, and really shift your thinking from potentially trying to scalp money out of the market all the time to really focusing on high probability or high possibility setups to where you can potentially scale those up in size. That will require that you can be patient and manage yourself, understand in detail what it is exactly that you are looking for, so that when you come to the screen, you're not chasing the market, you're letting the market set up for you to position yourself on the backs of the smart money to lock in potentially profitable trades, again, that you can scale up in size. So today, firstly, we'll review last week's best trade setups, but we're going to just answer some questions. I'm going to talk about some things today that will, again, come back to some really basic concepts. I'm looking for my best setups on any instrument. Now, I talk about trading mainly the British pound crosses, and the reason for that is that consistently and traditionally they moved very predictably in terms of timings and ranges of movement in terms of their daily volatility. They were consistently giving off one or two really good trade setups for 50 pips, usually in London and in the US sessions. Now, markets change, but it's the setups that I'm focused on, not the currency pairs itself. So one of the things that a lot of traders keep asking me is that if you could only trade one instrument, what would it be? I think you need to understand that no matter what instrument you're trading, you're going to go through the same different types of weekly cycles. You're going to have a narrow range days, you're going to have trending days, you're going to have peak formation days. And so it's really important to understand it is not the instrument that I'm trading, it's the pattern itself that I'm trading. And we're going to go into detail into some of those today. But just to come back to some really simple things that I look for during the US session. So I look at London, I look at the pound crosses predominantly when London opens. But a lot of my best trades will come in that US session after the course of the day has set up with Asia and London and New York. And again, the euro, the Canadian, gold and silver, and the British pound pairs, as well as the Aussie dollar, they all usually will offer at least one or two good trades every week in the US session. So coming back, I'm going to just focus on a couple of things. If I could only take one or two setups a week that were scalable in size, I know that I'm going to get at least two or three amongst these pairs over the course of the week, if not more. But again, coming back to my approach to the market, I'm really only looking for one trade that I can set up and scale in size. Now, there are several trade opportunities for the week. So if you grasp that, you understand why it's so important to just wait for the best setups. And some of those will take the full day to develop, especially with the US dollar majors. Gold and silver, another classic example. Unless we're at the high or low of the week heading into a session open, chances are the best setups are going to occur in the US session, and it may only be 1 or 2 times a week, but there's multiple instruments where those opportunities will show up at different days. So there are many trades where traders can have significant risk reward opportunities where the odds are slightly skewed in their advantage. So again, during the US session, I will flip to look at the euro, the Canadian, the Aussie dollar, gold and silver, as well as the British pound crosses. So I look at London, I look at the pound crosses. Occasionally I'll look at the euro and the euro yen heading into the London Open, and that depends on where we're at in that weekly structure, which we're going to go into detail next. And then of course I look at the round numbers. So over the course of the week, normally we'll be trading in a double zero box that can extend out 50 pips on either side as the week begins to trade or as it evolves throughout the week. They may expand into an upper or a lower double zero box. They may go past that 50 pip box towards the next set of double zeros. But I'm usually looking for double zero boxes with my structure. Then the understanding of the stop hunts. 25 to 50 pips is a normal stop hunt. And what that means is if we're trading sideways in a consolidation, whether it's 25 or 50 pips, and the market breaks outside of that consolidation, and that may happen as we head into our next 12 candle window. They may trade sideways between Asia and London, and right prior to the US Open go 25 pips below that 50 pip range, and then reverse and go back through the highs for a 100 pip move, which may be in line with the overall underlying trend. So again, most days the stop hunt on average will be 25 to 50 pips above or below outside of that range. And in some cases, that stop hunt may be from the high to the low or from the low to the high. They do not necessarily need to extend outside of that range. What tells us that? The timings. The timings are critical. So I've had traders, and we're going to go into detail into this as well in each step. I've had traders say to me, but if you're at the high and you get a trade outside of the 12 candle window, would you hit it? If I'm at the screen, yes. But if I'm not at the screen and there's a trade outside of the 12 candle window, what does that tell me heading into the 12 candle window? That I want to be trading in the direction of that underlying move that's already in place. That's the key, is understanding if there's already a trade in place, when the 12 candle window starts, there will be a second entry in line with that underlying trend. Best trade setups, we're going to review those today. After we put together each step of the system, we're going to go through some of my best trade setups for selling high in a down move or buying low in an up move, trend trades, and peak formation trades off the high and the low of the week. So hopefully you get lots of value out of this, traders. I'm going to break this down into each step, into short segments, so that you can come back and revisit it in sequence, and then putting that together and then understanding how I'll manage those trades, but most importantly, how to manage yourself and being patient and knowing exactly what you're looking for, and then understanding the most important part of that is that you can scale these trades up in size and compound your results a lot faster than just trying to scalp pips and get inconsistent 50-50 results. So stay tuned. Let's talk about structure. So structure to me is the most important thing to start with. Now I know a lot of traders will be using indicators and following trends of movement back and forth. What I'm concerned about in my approach to the market is that over the course of the day, the week, as things evolve throughout the session, we're going to have not only a high and a low of the week that starts to develop throughout the day and on a Monday, for example, but for me, everything becomes a rectangle. Now, one of the things that I learned from Peter Brandt studying classical charting is that geometry is important because that's what gives us our bigger structure for the market to trade either inside of, breakout, and continue for range expansions, measured moves of those geometrical structures. But also it allows us to have a method for controlling our risk and for measuring profit target potential. So we talk about targeting 2, 3, 4, 5 times or more in terms of our risk for reward opportunities. And when I look at the round numbers, which we're going to go into detail as well, again, if we talked about numbers being in this, for example, we might be in a 25 pip box. If the market extends out of that for a stop hunt, it may come out 25 pips down and back, which now we have a 50 pip target potential or a break, a measured move of that range. If the market was to trade between Asia, London, the market may come down and expand that range and go out to the top. So it expands it down, it expands it up, and we're still in a 25 pip box. But then we have a new low and a new high. Now we wait for the market to either work into the high for our 3 push pattern, our M reversal, or into the low for the same thing. We may get a 25 to 50 pip stop hunt for our reversal into the next session. But structure is really important because that's what allows us to start targeting measured moves depending on where we're at as the week evolves. If it's just for a session, it may be a 50 pip move back to the high of the day. If we're at the low of the week, this 50 pip box that could be developing if the market was to trade down to 50. So we talked about 50s and double zeros, which we're going to go into specific examples. But that geometry, that measured move now, that 50 pip box between 0 and 50 can become a range expansion for 3 levels of 50 pip movements. Or we may be in a day where the market may trade within 25 pip increments for a 75 pip high to low move for a 50 pip stop hunt back to the high of London. But structure is very important because that high and low of the day, the high and low of the week are what allows us to look at the bigger geometrical structure in terms of if the market was to break out at the beginning of a week out of an upper rectangle or a lower rectangle or a smaller geometrical rectangle inside of a bigger one at the low of a week. Those are the types of geometrical structures that can allow us to have a thesis going into the market for potentially trend trades. Again, we talk about the 3 things that markets do. They break out, they pull back, and they trend. They break out, they pull back, and they reverse for a false break reversal or a marginal new high, marginal new low reversal, which we will often see at the highs and the lows of the week. Or they break out, they pull back, and they go into a trading range, which we'll often see in a bigger geometrical rectangle, potentially maybe on a day 0 or in a low volatility day where the market tends to trade sideways for maybe 3 sessions, US, Asia, London. It could be Asia, London, New York for a big move the next day. But these are important things to be able to recognize as the bigger structure is setting up, maybe a Friday, Monday, Tuesday, a Monday, Tuesday, Wednesday. If the market's working down in 3 levels on a Wednesday into a lower geometrical sideways structure, these are all very important to be able to identify in live time with the highs and the lows. So let's take a look at those on charts.
So if we look at a basic weekly template in an up market, the importance of structure again can be seen a little clearer when we go our consolidation. We get our stop hunt in either direction, possibly breakout, continuation, and trend. But again, this day 0 scenario can come into our Monday, Tuesday. We could get a Monday, Tuesday, and a Wednesday reversal, Wednesday, Thursday, Friday, and a Monday the next week coming back down the other way. But the geometry, the structure, these rectangles are where we want to look at the bigger picture, we could get 3 levels of 25 pip increment rises. We can get 50 pip movements of these markets, and on some weeks maybe 100 pip movements for 300 pip levels of rise or fall. So 100 pip increments of movement Monday, Tuesday, Wednesday, that sort of scenario. But structure is really important as the template plays out, because again we'll get consolidations at the highs and the lows of the week. And obviously if we're already in a consolidation and a breakout, we can expect some kind of consolidation, perhaps a stop on high, stop on low for a continuation move long, that sort of scenario. And again, the same thing applies in a downward week. We can see that market go into a consolidation at the high. This may be a 50 pip box before we see stop on low, stop on high, and a continuation in the direction of the overall trend. But these geometrical rectangular structures are powerful for us to use as measuring tools. And again, sometimes they may show up as reverse, inverse head and shoulders. Head and shoulder patterns, you can see that upper and lower neckline boundary can give us our rectangle. Double bottoms, double tops, triple bottoms, triple tops, ascending triangles, descending triangles, and symmetrical triangles. These still will come out of a break of a smaller structure within the larger structure. But again, the measurement can be performed for these breakouts, but again, just targeting the bigger measured movement if we're in the direction of that breakout in the trend. So again, it may come off a stop hunt. We may already have a stop hunt and a continuation in the 12 candle window. And again, we'll go in more in depth with high and low of the day and the timings and the pattern of the price action when we are in those timings. So hopefully you got some value from today's video, traders. Structure, very powerful for measured moves. Start my thesis with that at the beginning of each day. Where am I at? Am I in an up template, a down template? Am I in a day zero? Am I in a high and a low situation? Have they hit the high? Have they hit the low? If we have a trade scenario playing out, am I just trading back to the high of the day, or is there a possibility for a measured move situation? Next, we'll talk about the high and the low of the day. So we're talking about structure, and no matter what instrument we're looking at, what market, any day, we'll look at the weekly structure, we'll look at the bigger structure at the top and bottoms of weeks, but generally speaking, I'm always looking for a rectangle marking off the highs and lows of a previous session, market's previous U.S. session, just as an example, giving you an idea of looking at structure. So we see we're in a 25 pip box between 50 and 75, but that high and that low give us a rectangular structure just in terms of, again, geometry, classical structure. You know, we can go back the previous day and we can get structure up top. And getting yourself in the habit of looking at structure and then thinking of the three things that we talked about that markets do. They break out, they pull back, and they continue. So an example of a upper rectangle, almost 50 pips, the market breaks out, pulls back into the next day, drops down 25 pips, goes into consolidation. They hit the high in the U.S. session. So again, just even looking at the high and the low of the day, how that evolved over the course of the day, and then of course in the U.S. session, they hit the stops, pull it back, go into consolidation, but we're already in a breakout in a downward direction. So there's an example of a sell high setup at the top of a pullback. But just in terms of structure each day, looking at the bigger structure and then observing how the market handles that. So the market breaks out in London, consolidation, works the low, sets a low of the day in place and a high of the day, works the high, engulfs, breaks out in the London session, pin hammer 50 pips below the London range, so 25 to 50 pips. For a pullback, this would entice traders to want to go long back into the breakout, and then again the breakout continues down. And again we just redraw our structure, our high and our low. And I'm constantly just looking at the big rectangle. So we have a rectangle, the market violates that lower border, pulls back, gives us a new high. So again, we're just using structure as a potential measurement tool, but also as a geometric range for breakout pullback continuation, breakout pullback reversal, breakout pullback trading range. So we've now got a breakout and a pullback, and we're currently in a trading range sideways between the US session high from Friday. From the Friday, the pink line designates a Monday morning, and a low of our lower geometrical structure. So we may get some higher lows or a breakout. Right now, though, we're inside of a lower geometrical structure. This market could break down and continue to break out, or it could break the highs and pull back, and we could have a potential day zero setting up for a reversal back in the long direction. But structure, these larger geometrical rectangles that can give us measured movements, but also our trading range to keep us out of the inside of that garbage, inside of the high and the low. We can look at gold. Again, it doesn't matter what the instrument is. If it has a high and a low, we can use this as our geometry. And again, we head into a day's session. The market works the high, expands the range, but pulls back inside of the high. So, of course, if the market was to break through that high, we would say that that 75 pip box had been broken, and currently we go sideways. The market trades inside, so again you can see how the market puts a low of the day in place, puts a high of the day, lower high of the day in place. So now we have geometry again. The market is inside, but it breaks out, and then again we can use this as a measuring tool for potential range expansions if the market breaks out to trend. And we see this market go sideways, and again in the course of our new week, we have a high of the day and a low of the day. We'll get rid of this other geometrical structure. But we have rectangles, and again, these boxes give us 50 pip. Usually these rectangles will be sort of 50 pip ranges, but we can see a great example of a breakout in gold, where this market on the Monday sets the high of the week, pulls back inside a peak formation in the US session, pulls back inside, and then in the beginning of the Tuesday, breaks out of the Asian range, pulling back. And again, just looking at our weekly structure, there's a bigger geometrical structure up top, but again, this gives us a range expansion. And these 50 pip boxes, the market's trading inside of these sideways structures constantly. And market, again, sets a low, breaks through, there's a breakout pullback. So these are trending. This market is now trending. We head into the next day. It extends the range out, and we get a lower rectangular box where the market breaks through back towards the high of the day. Of course, breaking, we see the previous rectangular structure. So again, an example of where the Asian consolidation continued to trend. Then the market goes up into a consolidation near the high of the day, and again, just observing that the market is making higher lows as it works into the high. It's working the high, working the high, working the high at the top of that geometrical rectangle for a sell high signal at the end of the session. We head into the next day. We have our bigger structure. And of course, you can see where the market consolidates inside, trapping traders on the inside of this smaller consolidation. And again, important even if you're trading that smaller consolidation to know, obviously, if the market gives a buy low signal off the low of the day or a sell high signal off the high of the day, and we get structure inside of these smaller structures. So we get a range expansion out of this smaller rectangle that gets broken in the US session 12 candle window, but you can see how staying on the outside keeps us from getting trapped as the next 12 candle session unfolds. Traders are trading these smaller swings, and they're getting caught on the inside where we have this bigger structure. Market breaks, eventually hitting the stops from the highs, and then goes back into consolidation. And we have our larger rectangle again to keep us out of trading inside of that tight, low risk reward, low probability chop inside of the range. I know some traders like to scalp that, but again, eventually the market gives us a low and a high that it will break out of and layer on top of for a breakout pullback continuation. And this is where traders can potentially, obviously, position themselves in the trend trades, but whether or not the market, again, we have these larger structures for measured expansions, and again, we'll talk about numbers in the next few videos, but just, again, keeping ourselves out of low probability trade setups where the market potentially is trapping volume before it breaks to one side or the other structure. I talk about reading Schabacker's book, Edwards and McGee, Peter Brandt's books. I'm a big fan of rectangular geometry in these markets. Just looking again Friday, Monday, I'm looking for day zero, the narrow range days, the days that don't seem to really go too far. So 50 to 75 pips with these lower highs that get broken in a down market. We've got our anchor point from the previous Friday's high. We're looking for that consolidation in a sideways market on a Monday or Tuesday, sometimes a Friday. The market puts in 3 peaks before selling off in the U.S. session off the high of that geometry. But we get our day one potentially setting up on the Tuesday. And again, these lower highs, we get our geometry, these lower, smaller rectangles get broken out of. So again, geometry, just again, horizontal geometry rectangles. We get a breakout in the Asian 12 candle window, which is a typical day one scenario when we have a day zero. If this is going to be a strong trend day, we'll often see that occur at the low or high of a day. If it's a down, a low of the day on a reversal week, high of the week, high of the day on a reversal downwards. But we've had a range expansion on day zero where they've worked the high, worked the high, worked the high before selling off. 3 pushes into the low, smaller geometry, rectangles, the breakouts in Asia, expanding the range in the second 3-hour window before pulling back. So we've put a high of the day in place just underneath of the peak formation from Monday. And they put a swing low in place, then they work the low. They hit the low, put a low in place, hit it. There's our W structure, breakout pullback, and a third push into traders who have gone long off the W. And we potentially now have a range expansion where we can put our measuring tool on the high and the low for one full expansion potentially, and maybe a second full expansion later in the week, depending on how this market trades. But again, we follow this. I follow this every single day. I'm looking for structure. Again, we'll get into the numbers in a minute on the next video. But again, just marking off our structure, our high and our low of our most recent session, high and low. That gives us our geometry, our high and our low. They come up, they work the high in Asia, they sell it back down to the low of the rectangle, then they work it in 3 pushes for the reversal in the U.S. session to hitting the high. The next day, again, we go into consolidation. And it doesn't matter, traders, this market may not have broken out, but again, we work from the high. I work from the high and the low. I'm looking for these types of scenarios that are working the low, working the low, working the low. Take out the high of the day, trapping traders chasing the trend, triggering breakout traders before 3 pushes into the low of the day, stop hunting the lows of that whole entire session. So you can see the volume trapped inside. They hit the stops, and they resume the original trend into the open of the U.S. session. Again, the next day, we have our high of the day geometry and our low of the day geometry. The market gives us our stop hunt into the trade in the first hour, then our pin hammer engulfment for the continuation and a breakout of that geometry, which to the numbers is 50 pips. This smaller geometry gives us 2 full expansions, but this was 3 levels of 50 pip rise from where that initially broke out of on the previous day. But again, these geometrical structures can give us targets not only for measured moves, but again, instead of targeting 50 pips, if you're in a trend trade, you can be looking at moves of 100 and 150 pips. The reversal, same sort of scenario. We see the stop hunt into the trend at a peak formation at a high of the week. This move was 75 pips. This market potentially from that big spike candle down can give us 1 full range expansion as a target beneath that pin hammer peak formation engulfment. So structure always gives us the opportunity for measurements in the direction of the move. and geometry rectangles, high and low of the week, high and low of the day, and then those smaller geometrical structures that can be inside of larger patterns. So just another example of structure, we had the Fed day on the Thursday, and again, this can be viewed as a reset. We see this horizontal consolidation similar to a day zero. They hit the high, they hit the low, but then we get our horizontal structure after the Fed. So we get a breakout of this lower rectangle. Market breaks out before we even get to the London session, puts a new high of the day in place. And again, just coming back to structure, our traders can call it supply and demand, support and resistance, whatever that may be, but geometry in these session timings gives us an opportunity to measure a target. In the US session, we get a 1, 2, 3 stop hunt down into traders that are long off the low of the day. Then we get our engulfments and the breakout candle as well. We get 2 full expansions of the range, again just emphasizing not only an expansion of this geometrical rectangle, but it's also a measured move of the Fed high and low breakout. So this potentially now becomes a flip zone. The market could still achieve that or continue even for further movement. We have a breakout of this geometrical structure, and again, important, just this trade came off the low of the day in an up move after breaking out of the lower boundary rectangle. Traders who resumed the trend in the US session prior to the breakout candle again, but breakout traders would have been in on this trade, and that geometry, that structure, is what can give us, it's the timings and then the movement from high to low. So the original stop hunt in London was to the high of the day, so they've triggered breakout traders, and then come back and hit the low of the day before continuing with the trend of the overall underlying movement from the beginning of that breakout of the lower rectangle. Again, we can look at any instrument. This is the euro, just any particular day, any geometry. We had a rectangle, this lower 3 push pattern. We can call this a reverse head and shoulders. Some traders trade the neckline. Again, coming back, I just look at everything as geometry in terms of a rectangular structure for breakouts. They've hit the low of that first leg. They've pulled back inside, consolidated it, and eventually broke out. Now my bias is to the upside if this market gives me a buy low setup. They come to the low of the Asian range in that gap time, engulfments, and we're heading into the next 12 candle window. There's our pin hammer at the round numbers again. So targeting a range expansion of this geometry takes us up just below the round numbers. And again, just the importance of timings of where this trade potentially was exhausting itself on the very beginning of the 12 candle window on a 2-bar pin reversal to the high of the day, just underneath the round numbers for 2 full expansions. But again, just coming back to the numbers, to a 25 pip box, 2 full expansions could take us up to the 50 pip area. But structure, and even in the high area now, we have our higher lows, and we have our pin to the high, and we have a small geometrical structure that the market eventually breaks out of for a move back down to the low of the day. Market hits it, 1 push, 2 push, 1, 2, 3 to the low, and goes sideways again, gives us a high and a low for our smaller rectangle at the beginning of the next day's session. Market breaks out above the numbers, pulls back, continues to work higher before pulling back in the US session, the Europe-London 12 candle window. So again, an example of where that upper structure, they broke out, pulled back and reversed. The first one, breakout, pull back, continuation. Higher structure, they break out, pull back, reversing. Continue the long trade back in the direction of the original breakout from earlier in the session. We get up to the high of the day as we head into the US session 12 candle window, 1, 2, 3 to the high, pin hammer, high bull engulfment for the move back down. stop hunting traders off the low of the day. But just structure highs and lows as the market's making higher lows and then works the high and tightening up into a consolidation. We can potentially get the reversal back in the other direction. But each day, looking at the bigger structure, as we head into the next day, we have the U.S. session. Larger high and low structure. The Asian session gives us a smaller rectangle at the high, near the high of that box, breaking out, pulling back, and then continuing down towards the low of that rectangular structure. Not to say these are trades, but just giving us the boundaries for those geometrical structures. We see the breakout of this larger structure just into the beginning of the U.S. session 12 candle window, 25 pips below that range. So again, the breakout is to the next 25 pip area. We talk about the average stop hunt is 25 to 50 pips. We get the engulfment and the pin hammer for the long trade at the beginning of the equities hour, in the second hour of that 12 candle window, back to the high of the day. So just stepping back, traders, and looking at the bigger structure, letting the market set up, letting the market give us the best trade setups, which we're going to go over as well. So again, I'm just using examples for structure in this example. And just each day, marking off our highs and our lows. So the market extended out, made a new high. We have a low of the day. The market comes down. We're inside. If we're in here, the market breaks out eventually, 25 pips below to the next 25 pip increment. Round numbers gives us our W structure into the Fed. Okay. Market takes out the high, moves up 100 pips before reversing in one push, two push, and then engulfing and coming back into consolidation the next day. We redraw our highs and lows heading into the next day. We have our high and our low. Okay, you could have drawn it on either side. I took this high. The market works itself down in three pushes, giving us a smaller geometrical structure inside of that rectangle, just below the 25 pip increment. And again, breakout, pullback, continuation, breaking the larger structure for a potentially measured move, but also to the high of the Fed peak formation on Thursday. So hopefully that helps traders. Structure can be a huge importance. I use it with everything beginning off. That's where I start my whole premise from. High and the low, the big picture, the big structure, that's the geometry that I'm looking to work, and then establishing my thesis based on where we're at in that weekly template.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.